Hey everyone, Paul Clark here, and in this video we're going to walk through DraftKings. And I think this video really is kind of coming out at a good time. So you look at DraftKings, just a short while ago, they were trading at as high as $64 a share. They have most recently closed below $40 a share. So you're going to get them about in the high 30s. Currently being filmed on October 27th, 2020. And I think that share price is going to be looked at as a gift when we look back on this in 10 or 15 years. I really think that this is a high growth industry that they participate in. So when you look at the online sports wagering market, that is something that is set to have huge growth. Some estimates are going to be that that industry is going to be experiencing 11% compound annual growth for the foreseeable future. And why is that growth happening? Well, when you look at it, back in 2018, the Supreme Court decided to strike down a ruling that said that there's this federal ban on wagering on sports online. They struck that down. And so since then, it's been up to the states about how they want to handle it. And you've seen a lot of states, in fact, there's been 18 so far, that have said that they want to participate or allow companies to participate in online sports wagering or online wagering in general. So with that in mind, DraftKings is not currently operating in all the 18 states that are available. They have a playbook in place to be able to be available in those states. So there's something that they're, certainly working towards. But when you look at it, the fact that, if we get to all 50 states adopting this, all 50 states being able to allow this online wagering, if that were to happen, that would be a huge, huge increase. And you start to think about the way the leagues are positioning themselves. So the deals that media companies are making, so from ESPN to Turner Sports, from the deals that are being made with individual teams, so DraftKings is actually partnering with the Philadelphia Eagles, the New York Giants, they're partnering with NBA teams, they're partnering with the Major League Baseball teams, so there's a lot there that actually says that, this is going to be successful. It's got the backing of, of the leagues. It's got the backing of a lot of key players with this, so a lot of reason to believe that this is going to be growing. Let's go ahead and just dive into kind of some different valuation scenarios here, because with this high growth, let's just say, what growth needs to happen with DraftKings to justify the current level of the stock? Okay, so as we discussed, today, October 27th, DraftKings actually closed at $38.70. That is still a lot higher than when they first announced that they were going to be going public with an SPAC, so Special Purpose Acquisition Company. And so when they kind of announced that, they were trading at about $20 a share. They've about doubled. Again, earlier they were close to tripling, but they've cooled off since then. But when we look at it, we can go ahead and take a look at the screen here. And if we project out their revenue growth through 2030, there have been some estimates that have said that, DraftKings would be having about $4.5 or close to $5 billion in revenue by 2030. Now that would mean that they would actually be growing by 9 times. So we look at this over here, they'd be growing 9 times compared to what their estimated revenue is going to be for 2020. They're estimating to have about $500 million in revenue for 2020. So when we look at this, we can project this out and say, okay, well, what if they grew to the point where they could be in that range, about the 4.5 or 5 billion? Well, one way to get there, I'm modeling it out that, well, what if they have in year 1, they grow by 55%, and year 2, they cool off a little bit to 40%, and then years 3 through 10, they grow by 24% in that range. Now, that's a really high growth rate to assume that, but that's one scenario that would allow you to get to that, kind of $4 to $5 billion in revenue target by 2030. And if they got there, then of course the question becomes, well, how much of a premium does the market want to place on that? What do they want to put on that in terms of their price to sales? And when you're talking about growth companies like DraftKings, I feel like it makes more sense to talk about it in terms of price to sales on that multiple, because they currently are losing money. So if we said that they were going to be, 4.7 billion, and you looked at their price to sales as maybe 8 times, where they're currently over, I think about 30 times price to sales today, but obviously they're really going to be priced at about 8 times sales by 2030. You'd say that they'd have a market cap by that point of about 38 billion. And if we assume that they actually have the same number of shares that are outstanding today, that would leave their share price at about $100 a share. But then the other thing to take into account is, well, we know that with growth companies like DraftKings, there's going to be share dilution. In fact, they just announced that recently, a couple months ago, that they were actually issuing 32 million shares. That being said, they've already got 300 something million, so that was about 10% dilution. And the other really strong positive about that, by the way, is they actually ended in Q2. They had about $1.2 billion in cash on their balance sheet. And, management kind of came out and said, hey, even with sports kind of, shut down or not really active, that they would only be burning about $15 to $20 million in cash a month. It's always fun to be able to say only when you're talking about losing $15 to $20 million. But when you compare that to having $1.2 billion in cash like DraftKings has, it's certainly a manageable number. And you also don't expect that, sports are going to be having a prolonged issue with shutdowns, and prolonged meaning like you think, hey, another 12 to 18 months, hopefully, and we can kind of start to move past some of those issues. But another way to look at that, by the way, when we look at the shutdowns, is that you can also kind of think that there are some things that I think will actually make the shutdowns be a net positive for DraftKings. And I think you're actually seeing this with a lot of businesses that are trying to think about, how to deal with, supply constraints, and maybe like getting better at being able to offer outdoor seating where they weren't currently, they're previously doing that. But in DraftKings case, with the shutdowns, they became, much more in tune with wanting to offer, iGaming relationships, or they wanted to offer betting opportunities for fantasy, or not fantasy, they wanted to do it with esports, right? So that those are all things I think that were sped up, or relationships and offerings that happened specifically because of the shutdown of sports. And I think that those segments are going to grow even faster now because of the foundation that they've laid in 2020. So I think because of that, I think that certainly could be a positive for them. And the other positive, I think, for investors, the fact that we're able to get this stock in late October for about $30 a share, that wouldn't happen, I think, if sports were in a fully open scenario. I really don't think that if that were to exist in 2020, if there would not have been, the shutdowns or anything going on that has disrupted 2020, I think that this stock would be substantially higher. So it's kind of a gift that we can get in at this price point at all. But let's go back to the valuation. So again, we talk about that and we say, okay, well, what if they grew by 55% into the next year, and then by 40%, and then by 24%? And we can already say that, yes, those are pretty aggressive, growth rates. And we say, hey, even if they actually grew by those growth rates, you would actually only be earning about 11% a year on your DraftKings stock, which doesn't blow it out of the water by any means. But I think that what's so encouraging is that DraftKings, it's not just the U.S. sports wagering market that DraftKings has to look forward to. I think they also have an international market that they're, kind of really positioning themselves to tap. They just had a deal they announced in South Africa where they were partnering with, a sports book down there. And with that partnership, that kind of really talked about, that casino, their management referenced the strength that DraftKings has with their software to be able to, handle the online wagering and things of that nature. So I think that's really promising to kind of show that they can have those business-to-business relationships on the strength of their, software and what they have to offer on that front. And like I said, I think that there's just a lot of strength that they're seeing from these different partnerships. I know some, analysts and some people out there have actually kind of downplayed, how important is it to partner with a Michael Jordan, or I think it's kind of downplayed and saying that, hey, I don't think that, a brand is going to be as impactful, when it comes to a company like DraftKings, because fans are primarily going to be focused on, who has the best odds and, who's going to have the lowest transaction fees and things like that. And I think that that's true to an extent, but I think what they kind of discount there a little bit is that I think, your typical kind of casual sports fan who might want to bet on some weekend games for the NFL, things like that, I don't think that they want to be transferring funds around from multiple accounts. I think that, if you have a couple $100 you want to play with in an online sports wagering account, I don't think that you're going to withdraw all that, wait the period to withdraw, go through the process of either signing up or adding that to a different account just because you happen to see one game that looks like it has slightly better odds. I don't really see that being a huge reason for users to want to be jumping around. So I think that's a part of it. I can also talk to you about this. So when you think about DraftKings, you think about, transitioning from the daily fantasy sports that they currently offer and will continue to offer. But when you think about it, think about the experience with horse racing. Now, I would really kind of suggest to you that I think horse racing, certainly it's dying out now, but even though there are still people who actually do enjoy going to watch races, but I think if you look at the success that horse racing has had, over the last 100 years, I think a big part of that success and the reason that people used to pack themselves into stands for horse races was the fact that you were able to bet on it. I think if you would have said that you had never at any point were able to bet on the outcome of horse races, that there would have been a much lower attendance at those events. And what's my point about saying that? Well, I know some people are concerned about the ratings of the NFL or ratings of sports, and especially they've kind of been soft in some areas as they've been coming back online in 2020. And, so some people have been saying, hey, if we look at, how soft ratings have been, maybe it's a sign to come that sports are in kind of a state of decline and they're not going to be as watched or as followed. And if they're not as watched and followed, that people won't be betting on them as much. So that's kind of one of the knocks I've heard about DraftKings. But again, I would just kind of make this argument to say, if betting can make horse racing exciting, okay, and then you take that betting element and you apply it to something where people are already, in normal times, selling out arenas and stadiums and, having people, crowd into sports bars, that people are already doing that without any gambling element. And now you add the gambling element. I think that that's actually going to make, the ratings, and it's going to make, people want to watch the games a lot more than what they currently do. And in fact, when you look at it from the motivation of why, the leagues and some of these teams are partnering with these gambling companies like DraftKings, I think that's, part of their realization as well. They know that, hey, if we can get people to be engaged in gambling on this, that we're going to drive ratings even higher, okay? So I think certainly the leagues, your NFLs and MLBs and what have you, they see the benefit from that side, and it's certainly going to benefit companies like DraftKings as well. But that's kind of my piece there. I think there's going to be a lot of people who are going to be, much more engaged in watching games because of the ability to bet on the outcomes. And it's not just betting on the outcomes. So, what DraftKings is doing is, they're getting really good at trying to innovate and come up with ways that they can offer in-game betting propositions as well. So it might be something as simple as, do you think that after halftime, do you think that the kick return is going to be returned for a touchdown? There might be an opportunity to place a bet on that. If a quarterback's doing, poorly, there might be, hey, what are the odds that he's going to be replaced by his backup? Or, the different propositions where you can bet within the game. Making field goals. Is the next pass going to be completed? Is the next play going to be a pass or a run? So when you start thinking about all of those offerings and how they're able to kind of provide those in real time that you can bet on, that's another huge area of kind of growth and of ways that they can, expand the market even more than what some of the estimates are. When we look at DraftKings, we can also, this is an excerpt, from the company's website, but when they look at this, they break out their average revenue per monthly unique players, and they do this for the quarter and then for the first half of the year and the prior year. And then they do it for the average number of unique players as well. And one thing, to note here is that, we understand that, shutdowns have impacted the total number of users. So if we look for the most recent quarter, last year in Q2, the average monthly users was 456,000. In Q2, it was down to 295,000. And now that number seems bad, even though, of course, it's explainable. But the good news is that your average revenue per customer, even though it's on lower volume, was in the second quarter higher by 50%. So it went from $42 to $63. So lower volume, but on the volume you did get, you had a higher revenue per customer. So certainly you could say, hey, if we're able to kind of keep that trend going with the higher volume, that would be a plus as we head into 2021 and beyond. I'd also like to share with you a quote. So this was from the earnings call from the CEO of DraftKings, and the CEO, by the way, he's even another story or yet another reason why I like DraftKings. So Jason Robbins is a guy that was one of the co-founders. Worked his way kind of early in the company to kind of position himself as the CEO, and he's never looked back after securing that position. And I really think that he's the perfect guy to be leading DraftKings. He's a sports and data fanatic, which I think is absolutely the right person to be leading this company. And again, from taking it from the days of the daily fantasy sports and the success they've had there, and all the way up to being able to say that they can now be a full-fledged online wagering company. I think that he's certainly a strong asset for the company. But you look at this quote from the earnings call, he had this to say. He said, "Even if there are some short-term hiccups, we have more conviction than ever in the long-term prospects of this industry and of our competitive position." Okay, so just referencing there that, hey, yes, there might be some, short-term headwinds that this company's facing, but, management's really bought into this. They understand that the long-term trend and the industry that they're operating in and how they're able to execute is incredibly strong. And I think that, it's just really exciting, to kind of see that kind of a statement from their CEO. Wanted to share that with you. So there you go. That's my take and a little bit about this company here. I'm a shareholder of this company. This is a stock that, I'm really looking to kind of hold for the long run. I really do think that when we look back 10, 15 years from now, if you take that long of a perspective on this, that you're going to be looking back and you're going to be pretty excited about saying that you were able to pick up some of these shares at just $30 in that range. So thanks for watching. As always, let me know what you guys think in the comments below, and see you next video.